Today we're issuing our latest report on the Irish residential market, which covers the performance of the housing sector for the first 6 months of the year. One of the most noticeable trends that we are seeing now, particularly in more recent months, is a deceleration in the pace of house price inflation. And that's a trend that we're seeing right across the globe in terms of international housing markets. For Ireland, the quarter to the end of June, we saw 1.6% house price inflation in Ireland, which was one of the lowest quarters in the previous 12-month period. Having said that, if you look at that 12-month period, average values in Ireland have still increased by 9.6%. Looking at the Dublin market, the equivalent figure is about 8.5%, whereas if you look at the housing market outside of Dublin, average values in that 12-month period have increased by about 11%. Now, this modest deceleration in house price inflation is probably due to a couple of factors. First and foremost, thankfully, we have seen a little bit of an uptick in the stock available for sale. So you'll remember we started the year with very, very low supply, particularly in the second-hand side, and that led to frenzied bidding on the properties that were available. That frenzied activity has slowed somewhat, and this is leading to that deceleration in house price inflation. And there's equally no doubt that the impending interest rate increases in July, September, and again later in the year has had an impact on consumer demand. So overall, a more stable period in terms of the bidding process and a slightly lower level of house price inflation in Ireland overall. Now, if we look at the level of activity in the market, the latest available information that we have is for the first quarter from the Property Price Register. And this shows that there were about 12,200 property transactions in that 3-month period. And this includes all private transactions but excludes block sales or social housing stock, which was sold from the new home sector into the social housing sector. Now, that represents a little bit of an increase on the volume of activity last year, but interestingly, it does represent the highest opening quarter for transactions in over a decade, which is a nice positive trend, albeit only modest at this point. Now, if we delve into those transactions, we can see there were about 1,600 new homes transactions in the country, which again was a modest uptick on 2021, but a little bit of a reduction where we were in 2020 actually. The increase in activity, again, for the new home sector is largely coming from the markets outside of Dublin rather than Dublin itself. For the second-hand side, there were 10,600 transactions in the opening 3-month period. And this once again represents a little increase of where we were last year. But again, like the overall market, it is the highest volume of overall transactions in the opening quarter since 2010. When we look at that data in a little bit more detail, we can see that owner-occupier demand is still the prevalent demand in the marketplace. It represents 79% of all transactions in the first half of the year. And within that, about half of those owner-occupiers were first-time buyers. Investor demand still remains quite subdued, representing only about 12% of all purchases in that period. And this further exposes the rental crisis and the challenges that are evident there. When we look at investor activity generally, in terms of the volume of investors leaving the marketplace, we can see that in the last 3 months, 37% of all vendors who sold their homes through Sherry Fitzgerald were exiting landlords. And that's the highest proportion of exiting landlords that we've seen since records began by Sherry Fitzgerald in 2003. And that is a very, very worrying trend. Now, what's particularly frustrating about this rental crisis is that unlike the very challenging nature of the overall housing market, there are some very well documented solutions to the rental crisis, which unfortunately, for a variety of reasons, have largely been ignored by policymakers over the last decade. And now, more than ever, the time for action on those solutions is now. We definitively need to bring a halt to those investors leaving the marketplace, and we do need to encourage more private investors back into the private landlord market. So if you take the Irish housing market and look at it within the context of the international or global housing market, how do we see? Well, all global markets are challenged at the moment. However, it is important to say that the depth of the housing or accommodation crisis in Ireland is much more deep-rooted than many of our neighbouring countries. And if this is in any doubt, we only need to look at the latest data from the Census of Population, which shows that we now have 5.12 million people living in the state. If you extrapolate from that data and you look forward, it's now clear what we need to be talking about is building 50,000 houses a year or even more in the next 10 to 15 years if we have any chance of bringing the Irish housing market in line with their European counterparts or indeed the UK market. So the need for action for policymakers is immediate. We need to do all we can to fast track the delivery of new homes. And this is particularly important when you consider that we're not even building half of that quantity today.